In a tough market like this one, you always need a shopping list of stocks that you can buy into weakness. And while the banks are really out of favor on Wall Street right now, that's because the Fed decided not to raise rates last week. I think there's at least one bank that is absolutely worth buying into this weakness. And I keep saying there's weakness. I'm talking, of course, about Cramer Wells Fargo, the best-run bank in the country, and a stock that I've liked for years, which I also happen to own for my charitable trust, which you can follow along at actionalersplus.com. Last week, out in San Francisco, I got a chance to speak with John Stumpf. He's the terrific chairman and CEO of Wells Fargo, and he assured us that the lending business is excellent. Plus, after today's decline, the stock now yields close to 3%. Now, last Thursday, we showed you the beginning of that interview with Stumpf, but there's more, and I think it's important that you hear the rest of what he has to say. So take a look. John, you're too humble, so I'm going to do it for you. One of 11, dairy farmer, totally strapped, and yet you've risen up in this country. I want you to tell people in this country what can happen: hard work and teamwork.
Well, you know, we grew up, as you suggested, very poor, a lot of children, small farm. We didn't have things, but we had values. And at the time, I would be honest, I wish I'd had more things. Now when I look back, the value of working together, of telling the truth, personal responsibility, pulling your load, and we never were allowed to whine. If things didn't work, you get up in the morning, next morning you work even harder. And those are enduring kind of qualities, and my parents deserve all of the credit for that.
Now, if you get knocked down, what are you supposed to do?
You brush yourself off, you pick up, and you go forward. And you don't look at someone else and say, that person's fault, you know, woe is me, that person has more, why can't I have that? I need a handout, I need whatever. There was none of that.
Okay, so which of those characteristics have infused the bank?
Well, I think teamwork. You know, we have 265,000. We call them team members. We would never use the word employee to suggest an expense be managed. These are assets to be invested in. Nothing is more fun than winning as a team. Vince Lombardi said that. I mean, you look around, Dick Kovacevic beforehand, he got the experience from the sports teams he played on.
One of my heroes, you know that.
And that's what it's about. And we have a lot of, and not that I, me, and mine are unimportant. We want people to be proud and of their own career development and so forth, but never at the expense of the us, we, and ours.
Do you think that the lack of a silver spoon how has it changed your life that you didn't get it versus many of the other CEOs in the country?
Well, I appreciate what I have. I mean,
and you do make a lot of money, but that's some people actually deserve it.
Well, and there's no question about that. But I am just, you know, sometimes I have to just stop and thank everybody around me. I mean, it took a whole village to raise me. I mean, I had people along the way, and I love this business. I love this industry. I love our company, and none of it would be possible without having a lot of help. So this is never an individual sport.
Now, you are famous, and your bank's famous, for not wanting to make the money so quick, but to play a long game. The short game got a lot of people in trouble, didn't it?
Correct. It did. You know, we are in the long game business. We had our 163rd birthday on July 13th, this last year. So we started in 1852. Think about that. We've been in business for almost 2/3 of the time the country's been around. And we think in terms of not the next quarter, but the next quarter of century. Now, it's not that the next quarter is not unimportant, but we always take the long-term view. Essentially, at the end of the day, what's good for team members, what's good for customers, what's good for communities, will ultimately be good for investors.
Well, you know, someone at home could be watching this show, maybe someone in their 20s, 30s, say, oh, that's all well and good for some 61-year-old guy being interviewed by another 60-year-old guy, and everybody's so successful, and they're all laughing the way back, but there aren't those opportunities anymore. These guys are living in the past.
No, there's opportunities. Just look around here in San Francisco about things that are being created. You know, I'm a product of public high school, public college for undergraduate, public school for my graduate degree, and hard work, working together, taking horizontal promotions. Everybody thinks you have to move the next step up. Sometimes it's best to move around and do other things to build your base, and then you have the opportunity to move up. So, you know, I always ask young people, and I talk with a lot of young people, and they come to my office or by phone or whatever it is, I said, what do you want to be doing in 5 years or 10 years? And once in a while, I'll get the answer like this. In 5 years, I want to be an assistant vice president. In 10 years, I want to be a full vice president. I want to have a parking spot. And I said, how about a jet? Do you want that too? Most of the time, I hear this answer. I want to know more about the company. I want to infuse myself with this culture. I want to give something back. I want to be a great, trusted team member. When I hear that, I pull my chair up because I want to feel the energy.
That's your person.
Those are the people who are going to make it.
No. I think we got in trouble a lot when I worked on Wall Street because there were some people who decided to make money very quickly. They made $10 million as a salesperson and then just said, hey, see you later, and left everybody else holding the bag. Have you ever fired someone because they made money too quickly?
Well, we have had people leave our company because they didn't understand the concept of risk and reward. What happened going up to 2008, risk moved down the line and reward got paid. Somebody originated did something, got paid, and moved it down the line. Next person did it and moved it down the line. If you disconnect those two things, bad things will always happen.
Where's the country? Where are we right now?
Well, you know, actually the country is in a relatively good place economically. It's moving along, not perfect. The biggest risk to the U.S. economy is what's happening outside the U.S. economy. And so that's a challenge that we had to deal with. So, and we have other challenges, of course. We need to get our elected leaders to get the immigration thing fixed. And there's issues like that there'll always be. But where would you rather do business today? Any place on the planet.
Where would you rather live today?
Where'd you rather live? Where'd you rather open up a business? Right. The rule of law, the can-do attitude, all the things that make us, our military, our banking system, deepest, most transparent. You want to live here.
Never goes out of style.
Never goes out of style.
That's John Stumpf, Chairman, President, CEO of Wells Fargo. And yes, he and his predecessor, Dick Kovacevic, my heroes. Still. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.